Hello and welcome to the Three Wise Monkeys podcast, a brand new series that's all about markets and investing. My name's Andrew Page, founder of strawman.com, and I'm joined by my two co-hosts, Claude Walker from Ethical Equities.
Hello.
And Matt Joass from mattjoass.com.
G'day, good to be here.
Guys, we've worked together for a long time. We've known each other for a long time as well. And I'll put it out there because I know you guys won't, a little too modest, but some pretty eye-watering returns over the years. And I thought, who better to join me in this conversation to talk about markets and investing?
Well, thanks, mate, but I should thank you as well for encouraging me to buy Pro Medicus all those years ago. It's been my biggest winner, and it's a nice thing we share that we bought shares on the same day.
Happy to talk about Pro Medicus all day long, my friend. In fact, that is something that we should chat about in a future episode.
Stay tuned.
But we're not going to talk about it today, are we, Matthew?
No, today we're going to talk about two companies that have been in the news, two battleground stocks, Corporate Travel Management and Kogan. So perhaps we could start with Corporate Travel Management.
This is, it's no mystery. The name kind of gives it away. These guys do management of corporate travel. Surprise, surprise. And in fact, these guys, if you had a time machine, maybe up until very recently, this is a stock that you would have just bet the farm on because it has delivered truly eye-watering returns to shareholders. Over the last 5 years alone, you've got an annual average return of 30% per annum. They've grown their revenue fivefold in that time. So,
it's not too bad.
It's not too bad at all. This is really one of those stocks that have just made incredible fortunes for those shareholders that have been fortunate enough to get in early enough and who had the temperament, the fortitude, I should say, to sort of stay with it long enough. So an incredible success story. But things started to get a little bit dicey in the last little while. In fact, shares are down about, as we record this, about 40% from their record all-time highs that were hit earlier on in this year. Mr. Claude Walker, can you give us a bit of a rundown as to what has happened recently?
Well, so first there was a short sellers report released last week, which sent the company into trading halt as it struggled to put together a response. Then the response came out, which was pretty reasonable for the situation. And now, today, there's been another response from the short sellers.
A response to the response.
Indeed.
And who are these short sellers? This is VGI Partners.
That's the one?
So VGI Partners. So it's taking us back to the beginning, which was only about a week ago when they put out their first report, which is 100 pages or so, about half of which was concerned with proving beyond all doubt that a significant number of the offices that Corporate Travel claims on its website were basically either, not really their active offices or maybe had one or two staff.
Phantom
Ghost
offices. That's the one.
They quite dramatically referred to them as ghost offices, the ones that barely existed. Phantom offices, I'm not sure what that one was. And skeleton offices.
That's right, they had all three, and they had little little graphics for each one. It's kind of a...
It's all about presentation.
When did it come out, actually?
Someone definitely had a lot of fun with that.
Halloween.
Right.
Yeah. Indeed, that was the hook as well.
Now, by the way, so as you mentioned, this is just one of 20 potential red flags, and we should acknowledge that in their response, Corporate Travel Management did say, actually, that's a fair cop. There are a lot of these offices.
Well, I don't think a fair cop was exactly.
Well, they acknowledged the truth in that, but then they also said, well, we are really a technology company. We have a presence there, and we like to, give that presentation of presence. But really, for us to do our job and for us to service people in those geographic locations, we're not a brick and mortar retailer. We don't need to physically be there.
Yeah, well, for sure. And there is that potential response. Although, if I'm remembering correctly, they have sort of publicized their offices all over the world in their investor presentations. So if they're a technology company and they don't need offices and all of everything you just said, then why are they publicizing their offices everywhere?
Fair question.
Over-egg the pudding, perhaps, a little bit.
Yeah, I don't quite get that one. But, while we're talking about the weaknesses in the short report, I think, another one that we all thought was quite questionable was one of their red flags was something along the lines of a high insider ownership and a board that had been very long serving.
Yeah, generally a pretty good thing for my money anyway.
Yeah, I think the argument was by having someone there for so long, it allows them to have more control, which could mean that allows them to pull off some kind of nefarious caper. But not necessarily means that they are doing it.
They were definitely alluding to nefarious capers, I'll say that much. But they had some slightly more convincing evidence of questionable decisions. In particular, you might start with this question of how they recognize revenue. Now, what these VGI partners people had discovered or had noticed...
Alleged.
Well, I don't think it is alleged at all, actually. What they had quite correctly noticed was that corporate travel management had changed the way that they recognized their revenue in the most recent results.
That is true.
Now, previously, when the company changed the way they recognized revenue, they were reasonably open about how that impacted their profit. Well, lo and behold, back then, it actually reduced their profit. But this time, they weren't really advertising the impact that this change in revenue recognition might have had on their profit. And there was every reason to expect it actually boosted their profit. And indeed, in their response, they admitted that it boosted their profit, albeit they say by only a very small amount.
Questionable. Matt, what was one of the other red flags that you thought was pretty reasonable?
Pretty red. One of the more red of the red
one of the
flags.
redder, the redder red flags.
Wasn't green.
So I think the low earnings on the cash balance was probably one of the big ones for me. So so essentially what it was, they had a cash balance of around $80 million and a very small amount of interest income from that, which would equate to an interest rate of 0.2% or something.
What are they doing
so
if they're not getting a decent rate of return
exactly.
on that cash?
So when that happens, people question, is that cash really there? If not, what, if it was there, why wouldn't they generate more? And kind of the accusation, the alleged happening was that the company may be managing its cash just for reporting season. So if they just somehow, delay a lot of payments to their suppliers, they can suddenly have a lot more cash on the books just before they need to report earnings at the end of the
Now,
year.
Corporate Travel did respond to that one in a bit of detail though as well, didn't they? Didn't they say something? I'm going to get this wrong, but didn't they say something to the effect of, well, actually, we don't have that cash for very long, and therefore we don't have the potential to sort of invest it in a term deposit or banking, any kind of decent rate of return on it.
I think that might have been part of it. They also kind of didn't really respond, talking about how they're different from retail travel management,
like Flight
such
Centre or
Centre.
Hello World.
But that doesn't really address. That was more to say that they shouldn't have had so much. They would have less cash per booking, you could say, which is a bit different to not earning interest income on that cash.
Okay.
And to me, they didn't really satisfy answering that one. I think that's kind of what's come back. So maybe we should step back though and talk about the timeline a little more of what happened.
Okay,
with
We can, but just on that point, Matt, I think just to close that off completely, you're absolutely right that they didn't really respond to that properly. And in fact, what they basically said was, the CTM cash balances can fluctuate. And, quote, to take a point in time cash balance for analysis is not appropriate as a basis for ascertaining effective interest income. So basically, you could conclude that they're kind of admitting that this isn't how much cash they really carry on the balance sheet throughout the half. So it was this sort of bizarre double-think response where they did a really good job of very gently sort of appearing to deny the implications in the red flag, but not really denying it. I thought that their response was very skillful, but it was skillful from the perspective of someone who's facing a lot of tough questions and they want to respond without completely shooting themselves in the foot.
Well, one thing that was very clear is that the market itself certainly had a huge degree of skepticism because corporate. Let me go back to
Let's
the
go
timeline.
to the timeline.
Okay, so the timeline was that the share price sort of started coming down along with all of the growth stocks that have seen their share price drop a little bit
Pre-release of
lately.
the short report. It was just coming down back a little.
And we should add here that there's been rumours about sort of problems with corporate travel management, organic growth for quite some time now. There's been various parties. I've been hearing these for 2 years now.
I was going to make that exact point. I think, and it's a very quick segue here, but it's one of these things that a short thesis gets released and the market's instant reaction is it must be true. And we've had some very high profile short theses that have the Blue Sky, Slater and Gordon, all the rest of it. I just want to make the point though that in 2016, when there was another very high-profile fund manager made a short case against corporate travel management, it turned out to be the worst short that you could have made because shares continued to soar after the fact. So again, I want to make that point. People tend to assume short sellers are always right. They're not. They've got pretty much the same kind of odds of success as the long term.
Well, worse if anything. Being early as a short seller is as bad as being wrong. Those guys that said that corporate travel management was a short back in 2016, if they had held their short, which would have been expensive to do, and I highly doubt they did, but if they did, they would still be losing money now, even now.
Incredible
Tough racket.
Very hard.
So that report came out, and then the corporate travel went into a trading halt for 2 days.
Now,
and then released.
again, we keep stopping this, but that's kind of unusual in and of itself, isn't it?
Well, I
Because
think people are taking their lead from other companies that have started to do this now. And we've seen this with I think Credit Corp went into a trading halt, and the short case against them wasn't as strong.
that was a terrible short thesis, right? And that got blown out of the water pretty definitively, right? Another example of, let's take and the point that I think we should all make is just quick. These guys have a vested interest. They've got a very self-acknowledged very large short position. They profit when the shares go down. They want the shares to go down, right?
Yeah.
So let's just not assume that they are
slow down,
right.
Andrew. I'm pretty sure that Credit Corp share price is actually below what it was when that short report came out now.
Okay.
So, but
Beside
what
the
did
point.
happen is they handled it pretty well. It may be below probably for other reasons.
To Claude's point, so they took their time to respond. They didn't just let the market open where everyone's in fear and panic mode. They go into a trading halt, give a couple of days to write a big response,
Yes.
and then release that to the market. I think they did a pretty good job of calming the fears. So the market opened, I think, down 30%.
Yep.
But then rallied back up to only close down 17% for that day. So that's actually not too bad of a response considering kind of the weight of change, and as it had previously been kind of a darling stock to now have this.
You're right, Matt, and it should also be mentioned as well that when you look at corporate travel today, again 40% below that high, it still trades on a pretty lofty multiple of its earnings, especially for a company that has recently said it's expecting to grow its operating profit by about 15 to 20% or so. So it's certainly taken a lot of the steam out of it, but it's still, this isn't far from what you call a value stock.
And I know it's a sidetrack, but I should just say I was actually wrong. The Credit Corp share price is a little bit up from that short report.
Okay.
So implying that if you do take your time with these replies, you can do a good job and it won't hurt you.
It's very important to manage those expectations. I think Blue Sky probably did a pretty terrible
So
job of that. And
Blue Sky is now almost the example of what you do wrong, which is to basically just blanket deny everything. I'm being perhaps a bit unfair to them, but they are down about 80%. Just deny
that's
everything.
one of those ones
and
where we can say they were actually the short
that's
were
true.
right.
Yeah,
Maybe it wasn't about managing the
we can actually say now they were right.
Yeah, and anyway, so Blue Sky pretty much just they couldn't have looked worse. They basically denied things and started attacking the foreign short sellers, which, whilst it might play well with some shareholders in an institutional background, that sounds
Andrew's
great.
doing some research.
Yeah.
Lemonade.
For shareholders with an institutional background, it doesn't really work to do that. They're far more interested in making money. They don't really care about the war of words. So either way, the point is when corporate travel management came out of this trading halt with its response, which was pretty decent, the share price still tanked like 20%.
Is that a case, do you think, of this? It's a well-hackneyed phrase in the market, but the market hates uncertainty, and it's just the very suggestion of impropriety is enough for it to go down, or do you read into this sort of saying, well, actually the market's no fool, there's probably some substance to it just by virtue of the fact that the shares are still down about whatever they are from the high.
Yeah, so I think there was two factors there. One was that it was actually a pretty good report. So it raised some 20 red flags, 170 pages. A lot of fun, spooky graphics along the way about ghosts and phantom and skeleton officers. So it got some good attention there. I think there's no way the stock's going to open up the next day. I think it would have definitely traded down somewhat, but then kind of the severity, particularly when you've got a couple of days to think about it and read both responses, probably does give some. It's more about the merits of that report.
And
so
it doesn't help corporate travel management that prior to this short report, it was trading on a multiple that really implied that this was a very trustworthy investment that you could really rely on to grow.
Huge amounts of growth in the future. But that's not unusual to corporate travel management in this market.
Yeah, I mean, they've done that before, but, this high multiple stocks, they really must have management that are well respected and well trusted, because basically, if shareholders think management don't have their heart in it and aren't going to do the right thing, then they will not give the stock such a high multiple of earnings.
We're still working our way through the timeline.
Yeah, I'm trying to get through the timeline.
Sorry,
You
mate,
guys
yeah.
keep jumping in.
Okay,
So
so
after the first trading halt, it drops down to...
Falls about 17% by the close.
All right, so about 17%. And now it's still trading at a multiple that implies it's going to keep growing. It's not completely down and out. It's just lost this sort of crown, and now it's just a normal growth stock.
And then another report comes out from VGI responding to the response and coming out with a whole lot of new accusations, and the shares go into halt again. So as of today, they're currently in halt, and I believe still waiting for the next response from corporate travel management.
Yeah, and that's where we're at now. And, I spent a little bit of time this evening reading through the response to the response, and I have to say it is pretty good. If I held shares in corporate management, I wouldn't be feeling completely comfortable reading this document, simply because it really makes the point quite clearly that there is still a number of concerns that have been little more than denied, but hardly proven wrong.
Here's my 2 cents on it. I read the short report, and unfortunately, it's a real frustration. It's a very quick segue. A real frustration to a lot of investors, because a lot of people didn't get to read it because VGI don't have a retail AFSL license that allows them to distribute it. So that's a whole other topic for another day. So I appreciate your frustration if you didn't read it, but it was a very compelling argument. And then corporate travel came back, and that was actually, for the most part, pretty compelling as well. Mm-hmm. And I personally, I'll put my hand up, I lack the forensic accounting skills to really be able to definitively say, oh, actually, these guys are clearly telling the truth. In fact, I'm not even sure if there's enough publicly disclosed information for an investor to make that distinction.
And that is a key point. So there are probably a number of issues raised in the reports that we should talk about, but I guess I'll kick it off with the impact of this revenue recognition policy. So the theory of the short sellers here, to paraphrase, would be that this is a company that claims to be growing both by acquisition and organically. However, there are questions around whether there really is organic growth. Now, every single year, bar one, it's made acquisitions that would have really impacted its earnings per share. Last year, they didn't. So, growth in that year could be amply used as evidence that there was organic growth. Now, the other thing that happened last year was this revenue recognition change, which we may have mentioned earlier. And essentially, in the past, making such a change, they had given a lot of disclosure about how this impacted everything, but they didn't really give a lot of disclosure when they made this change. And in fact, they've now admitted that the revenue recognition policy actually did increase their earnings just by a very small amount, but it still did increase their earnings. Now, essentially, what the response to the response says is, for corporate travel shareholders, it's impossible in our view to develop an informed view from the limited disclosures provided. So they are...
That's my point.
Exactly. They're making that exact point. Like, yeah, fair enough, you're denying this, but...
Oh man, and this
seems shady.
And this is the real. We've got to move on because we've got to talk about Kogan, and otherwise we'll be here all night. But this is what is, I think, so difficult, is that the complexity in these allegations are beyond most investors, and I'm certainly putting myself within that group. That is very, very technical stuff, and let alone whether the information is even there for those that are skilled enough to do it. So Matt, the question really comes back to, if either shares in corporate travel management have become much more attractive now, right? So even if I don't own shares, maybe I'm a lot more interested. I did note on Strawman that a lot of people have actually added it to their scorecards, presumably under that assumption. Or if you are holding shares, the question is, do I get out now because it could get a lot worse, or is this a chance to double down? What does an investor do?
Well, the shares are in trading halt, so they don't have to make
anything
that
right
thing
now.
right now.
Yeah.
You get to wait for the response from the company.
Right.
I mean, you should be reading that you should be informed about what's going on, and if you don't think you should be don't think you can get informed, maybe you shouldn't be holding it at that price. You know,
Right.
you have to weigh that up as well. Are you comfortable holding it given what's been said? If you you know, if that's kind of completely beyond you, maybe it is something to consider. This isn't right.
I think that's really smart, and I certainly think that a lot of the time as investors, we feel as though we have to make a decision, and I think a really good decision often is to not make a decision. In other words, now this is for this class of people who don't hold shares but might be looking, you know, enviously from the sidelines. And this is me. I don't hold corporate travel management shares. By the way, I wish I did buy them 5 years ago. I'd be a very happy person, even despite the fall. But for me right now, I'm not going to buy, and that's not because I have a strong view on it being either the fraud of the century or the bargain of the century. I'm just not smart enough to tell. And when that's the case, and frankly, you guys know me well enough to know that that's generally the case. When that is the case, I'm just happy to put that in the too hard basket.
Claude, what's your take?
Well, I definitely wouldn't touch the shares for a while. I think that it'll end up trading at a discount. I think that the salient point here is that they've changed the discount rates that they use to value their acquisitions. They haven't explained why they've done that. They haven't named their source for why they should be able to change this. And if I may, I'll just read from the Bloomberg transcript of the corporate travel conference call. An analyst asked, what's changed in the countries that drove the drop in the numbers, the cost of equity? And then the CFO replied, risk premiums and asset betas. Okay, cool, all right, said the analyst. Thanks.
I'm totally lost.
And it's not a clear answer. You need to say something more specific than that. And they don't source where they're getting the cost of equity. This remains extremely unexplained.
Can I just say, like, it's so easy to go down the rabbit hole in this. I'm going to play devil's advocate here. Any balance sheet, like any balance sheet that's out there on the ASX, wherever there is goodwill carried, someone is making an assumption, and it's almost, I would argue, it's impossible to definitively say that, you know, there's a range of values that you could reasonably use that are completely justifiable.
Yeah, but the key point is that they're making assumptions that are inflating the value of these assets.
It does inflate, but is that necessarily wrong? I mean, their response was actually, this is a very, you know, we've used a very definitive source.
But to inflate the value of cash flow generating assets when interest rates are going up doesn't make sense to a lot of people.
That is kind of strange. It's kind of going the opposite direction to the.
I know
I'm not saying it doesn't work in their favor,
but it should. Traditional economic theory would suggest, if anything, it goes the other way.
Yeah.
So that doesn't mean that it's necessarily wrong, but it does mean that a little more than just sort of citing unnamed risk premiums and asset betas might be required in convincing the market that this was the right move to make.
All right.
It's definitely not something that the market was thinking about before this all came up. So
Definitely not.
Yeah.
Okay, so for me, it was a too hard basket. For Matt, for you?
Yeah, you don't need to buy every company. Like, you don't need to get involved in that.
You're not doing anything? Claude, you're not doing anything?
No, I wouldn't be trying to short it right now, but I'm not diving into.
I'll ask one more question and then we'll move on to Kogan. What would you do if you did hold shares today? And I know shares are in a trading halt before you point that out, Captain Obvious, but they will not be forever. When trade resumes, what do you do?
I would probably be selling, but it depends what price, right? If they drop 80% on the open, then you probably wouldn't be selling anymore.
Yeah.
Okay.
At the prices they last traded at, I wouldn't be holding if I owned. But that's
good answer.
Ask yourself, would you be buying today? That's always my decision of whether I should be
Such a great
holding
litmus test. Claude?
I mean, I guess I do the same, but it's hard for me to put myself in those shoes because I would have definitely sold as soon as I read the initial short report on it.
Okay.
So to be owning shares at this point is just completely opposite to what I do as an investor.
Fair enough. Man, so much to unpick there. And you know what, one of these days we will do it for a future podcast. I'd love to talk about short selling in general because it's such a divisive topic. But let's not go down that rabbit hole just now. Let's go down this rabbit hole. Let's go down the Kogan rabbit hole. And let me paint you a picture here. This is another stock, a hero stock you might want to call it, that is, you know, the classic guy in his garage starting this small little business that goes on to be probably, I think it's fair to say, the dominant online retailer in Australia. They listed not too long ago, only back in 2016, Sales in the last financial year jumped 42%. Net profit after tax jumped 281%. Thank you very much, operating leverage. It's been an incredibly successful story. However, shares did hit a high of $10 back in March, and today they are 72% below that figure. Now, a bit of a steady decline for much of that, but very recently, these guys updated the market with a trading update, and then we saw a really big drop, and things have continued to fall. Oh, so much to start with. Claude,
so
what do you think here?
Dial back a bit. We've had this massive share price drop, but what happened before that? Well, some of the things that caught my attention was that back in February, founder Russell Kogan sold $50 million worth of shares at $8.80. And there was a small buy by one of his co-directors worth $20,000. And then major shareholder David Schaefer
Is he the CFO? I think he's up there. Anyway, yeah, go.
In June sold $10 million. And Russell Kogan, this is just a few months later, I beg your pardon, sold $31 million. So we're up to sales worth about $90 million, and then and this is the thing, this is at ever lower prices. First they sold at $8.80, then I
think the phrase you're looking for is sold reluctantly was the term used in
the reluctant sale wasn't till later, but anyway.
I think they said they were gonna so I think he said he's a reluctant seller, and then they weren't able to find anyone to buy, and then sold
like
2 weeks later.
But that was even more recently.
It was at an even lower price.
You guys are confusing all the multi-million-dollar director sales on this company can be confused with each other because there's so many of them.
Okay.
So we haven't even got up to the reluctant sale. I guess the non-reluctant sale was $50 million at $8.80. Then we had a few more sales, 10 million and 30 million.
So the point is that
wait. I want to get to the reluctant sale here. And then we finally have the reluctant sale in September, just a few months ago, at $6.41 by the same two directors for a grand total of just shy of $40 million.
So I'll put that in context. Shares are now at what, 270 odd or something.
That sale at $6.40 must have been so reluctant.
Now, can I just? I'm going to play devil's advocate here because why not? And I would say, good lemonade there.
Yeah, it's great.
Just open that up. So my 2 cents are this. I know it's very easy to sort of look at director selling and automatically infer that is a serious red flag. And let's face it, it's not a good look. But I would say to you guys, hand on heart, if I was Ruslan Kogan and I had 99% of my wealth in this company, and I know that there are very large amounts to us mere mortals, but he sold down all of that, and he would probably still have 70% of his wealth in this one company. I would do exactly the same, and I would say this: I would do exactly the same, even if I was super bullish on the company, because that's just prudent financial management.
Yeah.
Am I wrong?
No, I think so. There's some good research on this because
the
there's
answer
different
is no,
types of insider selling. So the kind of old maxim is from Peter Lynch is insiders buy for one reason, but they sell for many. So they buy because they think it's going to go up.
Love
they sell
that saying.
Maybe for a lot of reasons, diversification,
taxation,
and blah blah blah.
Yeah.
So there's some good research on this. There is some effect from insider selling, but it tends to be muted across the board. Where it is more interesting is when the share price is already down and then insiders are selling.
That's true.
That's a negative signal because they could have sold at a high price. Bad news is out.
Yeah.
Instead of buying at a bargain, they're still selling.
Yeah.
So that's where it gets interesting. And I think you're right. You have to view this as like one signal amongst many others. So I think we should dig a bit more into the business itself.
Let's exactly do that, and it's a great point that you raised, Claude. But we're gonna put that to one side for a moment. Again, very recently listed company. The prospectus is out there on the web for anyone who wants to have a look at it. But pre-listing, incredible growth. Since listing, incredible growth again. To my mind, I was negative. I was publicly negative on Kogan, but I'm not going to do a victory lap because my My thesis was never on that this is a bad company. In fact, I actually think it's a great company. I think he's done wonders with what he has created. If only any of us could create a company like that. My problem was always with the valuation. The valuation was always stratospheric. And even if you took an optimistic view on what they would, what market share they would be able to capture or what rate of growth they would be able to sustain, even under those scenarios, I still couldn't make the assumptions give me a value that made sense.
I think that there've been a lot of announcements here as well where they're constantly opening up what you'd call a new vertical.
Right.
In the
mobile phones, for example.
Exactly.
Yeah.
So a whole new industry effectively that they're entering. So that would be Kogan Mobile, Kogan Insurance. I don't know if there was pet insurance, if I just joked about that, but there's all sorts of these products, probably like 5 or 6 different ones.
And by the way, a big part of the bull thesis, a legitimate part, right?
Yeah, so that's the thing though, right? It's like partly legitimate, but how much, that's just an announcement. It's like I'm announcing that I'm going to start a software company. It doesn't mean that I've started one.
Yeah,
but
True.
And also, as we know, is you have only so many moments of customer attention. You can't very easily sell the same guy in the same internet visit a TV, a mobile phone plan, and pet insurance. You more or less have to choose one. What are you going to try to advertise as your impulse
yeah, that's
purchase?
a really good point.
So it's really just hard.
But do you have to buy everything though? Like if I'm buying there for a TV and I just pick up one of their extra offerings, there's still a multiplier effect there, right?
Yeah, maybe.
That's probably not the right term.
Let to be seen. Not a multiplier. But the point is the way that the market was reacting to these announcements is if every single intention that they had, they could just sell anything.
Exactly.
I actually
totally
tend to disagree. I think that Kogan's main advantage is a reputation for being competitively priced.
Yes.
I don't think that people necessarily want to buy their insurance from someone who's competitively priced, and I don't necessarily think that they are the only competitively priced telco out in the market. There's constantly, for those people that want to buy inexpensive mobile plan, maybe Matt, you'll know something about this. There's always...
It sounded like a slur.
I like to buy cheap and sell high. I don't know what...
There's always somebody in the market who's willing to lose money to acquire customers. That's fine.
They can give that money to me anytime.
Yeah. No, that's fine. But I'm just saying that it's hard to, compete in that. You can either lose money to acquire customers,
but
or
there's a
milk
positive margin. There's positive gross margin on, as far as my understanding is, on a lot of these products.
Sure.
Right?
So, but I just don't think they're that big. But then, more importantly, and this was the thing that, in my mind, combined with the director selling to create enough wariness for me to, go on TV and say I thought it was the sell. And that was that you've got these changes to the GST rules that mean that all internet purchases at below $1,000 are now suddenly subject to GST. Now
they were claiming that some of their competitors were skirting that,
which I'm sure is true,
law.
but who does this affect the most? This affects the people that are selling on price. This does not affect as badly the people who might have these luxury goods that they're selling over the internet, where their purchases, the people buying that are not doing it because it's the cheapest way to get it.
Are you saying? I hear what you're saying actually, but I would say that there is a degree of brand value and trust in there as well. So I bought a TV off Kogan. I had a pretty good experience with that. You and I have disagreed with that on the past. That's a whole other podcast discussion. But it means that once, and we know that the science on this is pretty solid, right? Once you've purchased with someone, once you've done that transaction, I am far, far, far more likely to go back there. So when they do say, hey, by the way, you can also get a mobile phone plan with us, or by the way, I'm much more likely to do it having had that positive first experience. So while you're right in what you say, I don't think it's necessarily easy to dismiss all of that and sort of say there's no value in them.
I'm not dismissing the mobile phone thing. What I'm saying is that previously Kogan was a beneficiary of the fact that JB Hi-Fi had to add GST to their televisions, and Kogan did not.
No. Okay.
Previously, Kogan benefited from that.
But was the difference just 10%? Was GST the only difference?
10% on what is their
Because
margins?
when I bought my telly off Kogan, and I did, I paid, the price I paid for the equivalent technical spec was like 50% difference compared to a Sony, for example.
I don't know about Sony. Definitely, they're cheaper than
We're probably
Samsung.
getting
We
too
haven't
much
mentioned
into
the elephant
weeds.
in the room here either, which is Amazon's entry as well.
That's what we need to mention.
And so, they're kind of trying to do a strategy which could work. I think we would agree it could work.
Yes.
But the problem was the market was giving them credit, although it had worked every time they announced one.
Right.
And it kind of leaves out the fact that Amazon has entered over that same period, kind of the most formidable, soon to be probably the largest company in the world, who has executed a similar strategy of going into multiple things, but done it very well over many years and with extremely low cost.
Weren't some people saying that Amazon was a positive for Kogan?
So the idea there is that because you are making the online transaction more favorable, more normalized, that is good for the market. So the market, let's say the online purchasing market grows as a percentage of all transactions.
Online's really new, isn't it? Not many people have learned
I'm just saying. So it grows very significantly. So let's say that Kogan only ever has 1% of the market share, but the market itself grows 10x over the next 10 years. That is still a very positive tailwind for that business. I actually think there's some truth to that.
Maybe a little bit, but I don't know. If you're going to be competing with Amazon, I think that might have an effect for a while. Like, hey, online shopping, like a lot of the baby boomers are getting into it for the first time maybe, but that doesn't mean that it's going to last when you actually are competing with the most competitive, ruthlessly low-cost company
Amazon
in the history of the world.
I like to be devil's advocate, right?
Yeah,
So,
But can't you buy Kogan stuff on Amazon?
You're going to say Bogan?
I almost said Bogan. Can't you buy Kogan like televisions on Amazon?
You can.
Yeah, I think that was another one of the pitches of how.
Yeah, that must be great for Kogan.
Yeah. So okay, so here's the again, we've got to be mindful of time. So here's the contrast that I wanted to say in terms of relative to corporate travel management. With corporate travel management, there is potentially a possibility here that maybe there was a bit of fraudulent activity with the books. We just don't know. There's a whole bunch of question marks here. Kogan is different. Yes, Kogan has come back a long way.
Fraud's a strong word.
Fraud is a strong word.
I really agree with that.
Fraud is a strong word, but you know where I'm saying.
I think that there's potential for overly promotional presentation of the company.
Kogan is different, and my point is that the reason Kogan is different is that what the market has changed its mind on is more of a valuation concern. Now, I would argue that Kogan is not worth zero. So Amazon, I agree, massive threat. A lot of these verticals, the market has gotten way carried away with the potential. I agree with all of that kind of stuff. But we are now talking about a business that has gone from $10, which was always ridiculous, back to $2.70. Now, maybe that's still too expensive, but at what point does it not become expensive? $1.30, $2? Is this, I'm going to try and put words in your mouth here, Claude, is this a never buy no matter what, or is it just still not cheap enough for you?
To be honest, it's probably not one that I will be looking to buy, but I definitely think it overshoots to the downside. Like, I ultimately agree mostly with what you said there. It's going to be worth something. People are buying a lot of items through Kogan. They make a profit. They've paid dividends.
Yeah.
So I think that it's definitely worth something, and I think that it's near certain that the market will overshoot to the downside, and maybe they are now. It's not trading on a particularly outrageously expensive multiple of last year's earnings. They no longer need extensive growth to be a good investment. Mm-hmm. Having said that, it's just not.
It's not floating your boat.
No, it's not. It's just not what I look for in an investment. I'm looking for much higher margin companies usually, with usually, if I can, a global client base. So, given that I'm like reasonably cautious about the Australian economy, getting into a retailer that is in the doldrums is not something that appeals to me right now.
Matthew.
I'm starting to get a little interested, to be honest.
Okay.
I agree with everything Claude said. It's not a super high quality company in terms of earning like high profit margins, high returns on equity, that type of thing.
And retail is just hard, right?
Retail's hard, but they do have a pretty good position. I could see them getting taken out by Amazon in a trade sale. I think their market cap's around 260 million now. I think Amazon, if they could buy it for that, would get a pretty good foothold and a lot
Yeah.
of distribution,
I
a lot
agree
of
with
other
that.
stuff, and be able to run the company a lot better than Kogan probably.
Yeah, I hadn't even thought of that angle, actually. That's interesting.
But yeah, so I'd say I'm interested, but I'm not like jumping in, and I'd want to just see probably some more results potentially, because I think they've kind of obscured a few things, being a bit promotional, and I like to see that they're actually still growing. The most recent update was effectively that some of the business lines are just down, which is like, for a growth company with this
Right.
thin margins, you have to keep growing. And the margins to me is the real one that I want to get comfortable with, because they're very thin already, and if those come under more pressure, which is what they're saying, that's very bad news for them.
That, sir, is a very, very nice tease to a little bit of work that I know you've been plugging away at in the background for your website. I know you're talking a bit about inflection points there, and I want to try and actually revisit this, if I can actually commit us to doing it either next week or the week after, because
Yes,
it's a
that sounds
fascinating one, and Kogan is potentially a very, very, very good example of that. My 2 cents, I actually think that on Strawman, I put my valuation at 388. I certainly lowered it after the update, but I'm still well above where I am. I'm still assuming pretty strong sales growth.
Okay.
And there's I'm only going out 3 or 4 years here, and a reasonable margin, and you've got to factor in the operating leverage there. Now, that's probably the attack on that might be that, yes, that's okay, but longer term, things are a lot more challenging, so I will revisit that. But I likewise am getting very interested as well, although I've been very negative on Kogan for a while.
So 388, it's currently what, 280-ish?
It's like 40% over.
You must be close to buying.
You know what? Here's the thing. This is a whole podcast in and of itself. You sort of like, you try and feel as though you do some objective work, right? You dust off the spreadsheet, you do some work, and then the market like fundamentally disagrees with you to not like 5 or 10%, like to like a ridiculous degree. And, I like to talk a good game about, the market's going to do, you have to sort of stick to your guns, but it is very hard to stick to your guns when your valuation is out that much. Either the market is like ridiculously wrong, or I am. And
I'll tell you what, if it's still trading, I think it was 18 times past earnings or something now, if it's still trading at that multiple after the full impact of the GST changes wash through, then I would say I think it's probably really good value. I just think that what people are underweighting is that Kogan was potentially just an arbitrage. You can buy at JB Hi-Fi and pay 10% GST, or you can buy online from Kogan and not pay 10% GST. I realize that their cheapest products were under that, but there's still this sort of like base arbitrage level where it's a tax arbitrage.
guys, I'm pretty happy with that first episode. I think we actually managed to get through that without, well, I certainly,
Good chat.
I'll speak for you guys. You
take.
didn't embarrass yourselves too much. Who knows what I did, but let's pretend it was
Just
one
one
take.
take.
Let's pretend it was one take. Look, before we wrap it up, I'd like to say that we're going to put some Twitter handles and an email address or two in the show notes here as well. We'd love you to get in contact with us. If there's a stock that you're interested in talking about, if there's something you want to challenge us on, whatever it may be, we would love to hear from you. So make sure you get out and get back to us. Also, as well, if you're listening to this on iTunes, make sure you give us a big, nice rating. That certainly helps us reach more people and ensures that we can continue to do this, or whatever your platform of choice is. Gentlemen, closing remarks. Claude.
Well, if we get enough listens to this, then we'll do it next week, and next week I'll be happy to talk about the stock that I've bought most recently.
Ooh, nice
that's a good
tease.
tease.
I like it.
Yeah, no, I'm keen to keep doing this. So please send through some questions and comments on Twitter. I'd like to have a kind of interactive session where we can hear what people are interested in, and hopefully it's the same things that we're keen to talk about. But yeah, send through those comments.
And if you'd like to hear more from these guys, I would very strongly encourage you to go to mattjoass.com. That is mattjoass.com, or Ethical Equities. I'm not going to spell it because it's the normal spelling, unlike your name, Matt. Go with that. Some really, really, really great stuff there as well.
Ethicalequities.com.au.
Sorry, .com.
Or just Google ethical equities.
It will be the first result. Well done to you, Claude. Until next time, I've been Andrew Page.
Matt Joass.
And Claude Walker.
And we're the Three Wise Monkeys. See you next time.